Raj here from West Data. Welcome back again. So let's look at the market structure analysis for the week starting December 2021, right? So let's get started with our global market trends data here. So as we see here, last week was kind of a mixed market, so things are getting changed pretty quick from pressure to correction to, so that indicates that there are a lot of fluctuations, volatility, uncertainty. But overall, at the end of the market, so as we see here clearly, it is a mixed market here. So there are the out of three global U.S. markets, one is under pressure, and two of the markets are confirmed uptrend, and then from this one is also the US market, Russell, which is under correction still, and the next two ones are European markets, which are again mixed mode. One is under pressure, one is under upward direction, and also for the Asian markets, as we see here, Chinese markets are uptrend and Hong Kong market is under correction. Within India, the two markets, Nifty is under correction and BSE is uptrend, right? So that's what it is. It's kind of a clearly a mixed mode market as of today, right? So we need to wait for some consolidation and then breakout of some clear direction. So there is no clear direction in this market as we see clearly here, right? So either the clear direction means either majority of like this under pressure, right? Or majority of markets are uptrend, right? Like this, right? So we need some majorities, right? So that's what we call it as a clear direction. So right now, as you see, global markets, they don't have conviction, directional conviction on either direction, right? So if you take only US, it's not on the same direction, right? So if you take all four out of these four markets, no clear direction. Within Europe, there is no direction, right? Within Asia, absolutely there is no clear direction, right? So none of the markets have a clear conviction towards any one direction, right? So that's what we are, right? So, but one good thing is we see things are getting improved as we go by day, right? So compared to last week, right, we can see things got changed into green last week. A lot of things got changed from correction to green, like that, right? So Indian market, so it's we can consider this as okay, markets are getting ready, coming out of a panic mode and getting ready for some direction, but still we need some clear confirmation on all this key indexes to clearly see a direction, right? So this could go in any direction as it stands now, right? So that is what it is showing us. Okay, let's look at the key charts. Let's go into Nasdaq, right? So Nasdaq, as we clearly stated last week, the markets are getting support at our predictive analysis level, which is nothing but the which is also the same as that of the last month close, that white dotted line here. So that's playing right now as a key level of support. Okay, so when it breaks, we can expect the market to come easily up to this level, because there is a zone here, right? As we see here, there is a clear zone here, right? So it can easily pull back up to this level, right? And if it takes this support and the reaction is kind of some bulls defend this support, then it can go up. But clearly, as we see here, the markets are range bound in a way, right? As we see here, the markets are kind of range bound within this box like this, right? So that is why, as it was evident from our global data as well, it's not a clear direction, right? So it's kind of range bound within this. So any direction where it get break out, right? So can go a long run, right? So if it breaks out up, it can go long run. It can breaks out down. It can go. There are different levels here, as we see here, right? So this zone is a very key zone here to break. Okay, so it can easily come back to this zone before it can go up high, right? So that's what you're seeing. It is a clearly a range bound market for Nasdaq, right? Let's look at S&P 500, right? So S&P, let me see S&P 500. So if you look at S&P 500, same thing. We have a clear range of defense at this point, first level of defense. So we can expect the market to pull back. So markets are clearly playing within the last month range, if you look at it, right? Last 1 month, the markets are playing within the range clearly. So market can very well come to this level, take a support and go back and chop between this level for some more time. And as we all know, December and January months, generally the seasonality of index is mostly sideways, right? So it won't take any particular direction. We saw during our last meeting, I was explaining the seasonality of S&P and other stuffs. So as per the seasonality of last 20 years, the nature of this index is mostly sideways, right? So until mid of February, right? Mid of Feb can go easily, take a sideways direction and then break out in either one of the direction. And remember, as per the seasonality chart, most of the time on Feb we see a pullback, right? Most of the time in the last 20 years we always see a pullback on after mid of Feb, right? So this could go like sideways, and mid of Feb this can go down up to that level of 14% correction we talked about in our previous week. So this is an easy target, right? So from here to here, right? So this is 7%, this is 7%, right? So this is 7, this is another 7, right? So this bucket is another 7. So 14% correction easy if it falls under the same pattern of mid-Feb pullback, easily reachable target is like, these numbers, right? So that those are all the key levels to watch for, right? So so if you look at this, the key level to watch for Nasdaq, I'll put some key levels here. So this is the key level for sure, right? Right now as we speak, it stays at 15,800 is a very, very key level for us to watch for, 15,800. If it breaks, it can easily come back to 15,300, right? So 15,800 to 15,300 is a easy level, right, for the markets if it breaks this level, right? And those are all the two key levels to watch, right? It's right here, 15,800 and 15,300 approximately, right? So that's for Nasdaq. And for S&P, it's this range, right? So 45.50, right? 45.50s, this is the 45.60s range. So it can easily come back up to 45.60s, right? So it gets a support in this zone easily. As we see here, the last month's close, last month's low, and our predictive analysis indicator all are at the same zone of 45.50 to 45.70. That zone is going to be a support zone where it could take a support and then again go back up to this range, right? So same range bound thing, right? Can go like very well within this zone, right, for rest of the year, right? And if it breaks out, easy target is this first target, and the next target, which is like a worst case scenario, it can go up to this level, right? Same pattern here. So here also, if we look at the numbers here, as I said, 45.50 to 45.70 is a good levels to watch for reaction. If it does not react at this level, easy target is 4400, right? 4400 is an easy target, right? 4450 or 4400, a 50-point range generally, right? So that's what we work with. So 4400 is an easy target for S&P, right? But we don't see any signs for pullback and all, right? So as of now, it's always looking like a range bound market. So it can go very well within this range. As of now, it's at the lower range of it. So it can go, we expect this to go like this and then get support here and then come back here, chop between this, right? So that's what we are expecting mostly, if it stays within this support levels, right? So that's all for S&P 500, right? So, and then the last one is Dow Jones. As we all know, it's always outside the bullish band above here. Right now it is trading at, again, the same pattern with the range of this range, very well within this range. So this can also, same thing could happen here, chop between these ranges, right? And again, the key levels to watch for this one is clearly 34,900 is the first level. If it breaks that level, an easy target is 34,200 is an easy target, right? So it's a 700 points is an easy target if it breaks this level of 34,900, right? Easy target. But again, as all the market states, since it's a mixed mode, people are not having any conviction around either direction. So we expect the market like to go within a range bound market like this for until mid of February, and then take a direction either up or down based on the conviction of buyers and sellers, right? So that's what we are expecting. So this is for YM, right? Dow Jones, and that's it, right? So next couple of weeks we expect a sideways market. Volatility we are expecting a little bit less, since a lot of traders are on vacation, so the volume will be less, so the volatility will go down a little bit, and the market stay within the range bound direction until it takes a discovery phase, right? The price discovery phase has to start, right? Until we see that pattern, it stays within that levels, right? Cool. So that's it for this week. So have a safe trading environment. Happy trading. We'll talk next week. Thank you. This is Raj here.